we have made many changes to our markets, the way they operate over the last 20 years. When we started liberalizing in 91, and since then we have kind of made a lot of changes incessantly, starting with automation of exchanges, then clearing houses, which give guarantees, and depositories, then derivatives, and so on and so forth. But what we have done is we have created, in a sense, the most automated, the most safe system. But somehow we have not got the trust of people. We have actually reduced the number of people investing in the markets, and we need to introspect. For me, one of the biggest issues I am always trying to grapple with myself is that how do I attract more people to go through the markets instead of other asset classes, including even in the overall savings through financial instruments, including banking, insurance, and markets. It's very, very small in India vis-a-vis say other asset classes. And for me, it has always been a puzzle, saying what do we need to do to ensure that more and more people come to the financial markets, because today India is in a situation where over the last 20 years, we have probably got $250 billion of foreign portfolio investment, but we have probably sent out $500 billion in importing gold. So for me, that kind of dichotomy always worries you, that that money could have gone into India's industrial growth, in creating more jobs. India needs to create practically 1 million jobs or more every month for next 20 years. And that cannot be created by putting money into assets, especially savings. India is a high savings country, but it's not high investing country into high productive capital.
Right.
The low capital or low productive capital like real estate or gold or silver, for me, is where I've always grappled with, and I've taken up with the government saying, at least make people aware of the markets, because you've always taken banking system as the good boy and the markets as the bad boy, and you have tried to promote banking system, which is a good idea. At least that's financial savings. It's going into productive capital.
It's almost the other way around now.
But what has happened is, because the way the structure got evolved in banking, the responsibilities and accountability kind of got diluted. Whereas in the markets, it's all sort of straight. It's very transparent that if things are not happening, they are not happening. You get to see it much before anyone gets to see it, even before it comes into newspaper sometimes. And that's how, for me, the markets are what I call
under a microscope, whereas the banking system may not be.
It has not been. Now probably it is coming into that. But effect is, overall, we have created a kind of comparative distrust in markets, saying they're volatile, they have a lot of scams and so on and so forth. But I mean, if you see the outcome, although despite all the sort of scaremongering, as I would call it, what has happened is today the capital represented by stock market, that is market capitalization listed on exchanges, is now severely large compared to the entire banking system. And now that is also a surprise to me. But for me, when I am just now talking on whether banking grows or markets grow, they are much better for an economy than other asset
idle
classes
assets,
growing.
relatively idle assets.
Right. And
like
so for
gold.
me, that is the conundrum I am trying to fix. And somewhere in the line, with Basel III and other norms coming in, the banks may not be able to lend too much to government, state governments, and so on and so forth. I have taken up with the governments at the state and central level, and also with RBI, saying, let's start auctioning government bonds. Let's make it easy for people like you and me to invest in government bonds. And government bonds are the most risk-free assets there is in the world, especially if you are trading in Indian rupees. And if you can have those government bonds coming to the market, then people are going to invest in that, and their principal is not going to be taken away or is not going to evaporate. And that is going to create trust in the people on the efficacy of markets, efficiency.
So you're saying that's the route you would choose to actually bring back trust into the markets. Use government bonds, bring them onto the exchanges, and allow people to trade and feel comfortable with.
And for me, there is a natural hierarchy. Of course, probably I have created in my own mind, but I think you need to have largest number of people investing in the risk-free assets. Then in the pyramid of things, you need to have corporate bonds, which are slightly riskier. But then you are not taking, basically you are taking a credit risk and not the interest risk. And then the equities, where you are also taking a price risk on the asset going up or down. And then derivatives. Today, Indian markets, the way
But
we
it's
have,
almost it is the other way
it
around.
is the inverted pyramid as I
Yeah,
call it,
yeah.
that we have largest amount of trading happening in derivatives because of again the fiscal incentives. I would say rather incentives being given to options, futures vis-a-vis, even investing in equities, and that for
So are
me.
you saying we should remove those incentives or disincentivize?
I mean, somewhere along the line, you need level playing field.
Okay.
If government says that no, tobacco is bad for health and food is good for health, but government is charging very little tax on tobacco and huge tax on food, you are in essence saying that tobacco is fine, right?
Right.
And
But
that
the
is
budget
what,
did raise, of course, very marginally.
I mean, I
on
think it is a what I call a insignificant token amount.
Okay.
And somewhere on the line, if we are serious in investment and not speculation, today India basically has become a very highly speculative market. Today we are the second most speculative nation in the world after Korea. Korea's derivatives to equity ratio is around 33. Ours is around 15. And people who we learn from are around 2:1, 3:1 kind of numbers, right? So we have huge derivatives trading vis-a-vis even equity trading. And till now, of course, now IPOs have started coming up, but the primary function of the markets of raising funds for the corporates was actually practically sidelined, not only in India but internationally.
Right.
Now, other countries like US or Europe, although they don't speculate as much as we do, but even if they do, they already have infrastructure built.
Right.
They have a
So
society.
how would you disincentivize derivative trading?
At
then?
least the taxation, which is
So you feel that it needs to be raised for one?
For me, instead, you reduce the tax on the equities, which is like huge. You are paying 20 basis points for taking delivery. And for me, that is investments. You are disincentivizing investments and you are in comparison incentivizing speculative trading. And for me, if you just bring down the taxes and for that whatever you need to do for other taxes you must do, but somewhere on the line if you don't understand the basic framework that you want to improve investments, if you want to increase investment, but if you keep on taxing, who is going to come and invest?
Right. So that's an important point which could obviously help the health of the capital markets. So last question. So what are the 2 or 3 things that you're doing in 2016 to bring more investors, new and perhaps old, into the capital markets as Bombay Stock Exchange?
Basically, we for almost 135 years out of 140 years of our life, we were primarily a stock exchange. We were trading only stocks. And then we realized that you need to have other asset classes. So we introduced equity derivatives, currency derivatives, interest rate futures, mutual funds, which has become very large for BSE, SMEs, e-IPOs, and so on and so forth. And now we are also going to bring commodities trading. We have applied to the securities market regulator to allow us to do even commodities trading now that the merger of the 2 regulators has happened. And so for us, new products are important. We are also trying to promote IPOs, saying that more IPOs should come. We should have more distribution, and companies ultimately primary purpose of stock market in a developing economy is to channelize savings from the householders into the productive capital, that is companies, and that's what we are trying to do. We are also trying to now upgrade our corporate bond platform so that corporates can come and raise sort of more capital, and people have more information about the bonds, because till now our trading systems were primarily for trading, not giving information of the bonds. And bonds don't trade frequently, but people are worried about the credit rating and when it was issued, when the next interest payment is due, and so on and so forth. We also have a lot of hopes on the government bonds auction that is planned as per this budget proposal. So we have sort of many more things lined up. Of course, we also have 2 more large activities going on. One is spot exchange on gold, because government is keen to create a framework for gold to be kind of gold trading to be more transparent, and we have tied up with the Indian Bullion and Jewellery Association to come up with a new exchange. I don't know when we would be able to implement. And we are also trying to set up a new exchange in GIFT City, which is kind of a international finance center that is coming up. So we have our plate full in all this.
And bottom line is you do see more investors coming back in 2016 than perhaps before.
No, and we have a lot of hopes that investors, of course, what happens is investors chase past returns. And other asset classes which were giving great returns like gold or real estate have stopped giving returns. In fact, last 3 years, 4 year scale, they have given negative returns. And that's why people are coming to the stock markets currently. And for me, if stock markets continue to grow well, because India is going to grow at a pace which has not been seen before, more people should be motivated to come into the stock markets. But for me, the base of risk-free instruments is where you can get more people accustomed to
sampling,
dealing in the markets. And also we should ensure that there is a kind of a minimum qualifying standard for people to invest in higher and higher risk instruments. So if you are trading in, say, derivatives, you have to be really, your net worth has to be very high and you have to be very highly qualified. Today, we are bringing anyone and everyone at very low amounts, and they are losing money, they are losing trust in the system, and then going away. So for me, I think if we can create a pyramid which is what I call
standing in the right way, not in the inverted.
Not the inverted way, then we have done a good service to the nation. Otherwise, we can earn a lot, but if we are not helpful to the society, it is sort of not correct.